Hello traders, and welcome back to Explain the Charts. Today is November 17th, 2025, and we're taking a deep dive into XAUUSD, or gold. We've seen some absolutely explosive moves recently, so we'll cover the latest news driving the market and then jump straight into the charts to see what they're telling us. First, let's talk about the headlines, because the fundamental picture is overwhelmingly bullish right now. Recent news reports from the past week highlight a massive surge in the gold price, with articles noting prices hitting as high as $4,085 and even $4,130. The primary catalyst for this rally is the growing expectation that the U.S. Federal Reserve is about to pivot and start cutting interest rates. Markets are reportedly pricing in a nearly 70% chance of a rate cut this December, which is huge news for a non-yielding asset like gold. When interest rates are expected to fall, holding gold becomes more attractive compared to interest-bearing assets. This sentiment is also being fueled by weakening U.S. labor data and falling consumer sentiment, strengthening the case for the Fed to ease its monetary policy. A potential end to the U.S. government shutdown has also added to this bullish momentum, creating a perfect storm for gold bulls. Now, let's switch over to the daily chart to see how this news has been reflected in the price action over the long term. Looking at this daily chart, the overall trend since mid-2024 is undeniably upwards. We've climbed from the $2300s all the way to a peak of nearly $4,400. This has been a powerful, multi-month uptrend. The all-time high was printed just last month on October 16th, reaching a staggering $4,378. This level now stands as the most significant long-term resistance that bulls will need to overcome. However, following that peak, we saw a very sharp and aggressive correction. The price fell dramatically over the next 2 weeks, finding a major support level around the $3,880 to $3,900 zone in late October. This sharp decline indicates significant profit-taking and the presence of sellers at those record highs. The recovery we've seen throughout early November directly correlates with the renewed buzz about Fed rate cuts we just discussed. Price bounced hard off that sub-$3,900 support and has since been trying to reclaim higher ground. Currently, the $4,000 mark is a critical psychological level that has acted as both support and resistance. Let's zoom in on the daily chart to get a clearer picture of this recent volatile period. Here we can see the action from September through today. Notice the incredible acceleration in late September and early October, where the price just exploded upwards to that $4,378 peak. But look at this massive bearish engulfing candle on October 21st. This was a huge reversal signal, where the market wiped out several days of gains in a single session, showing that the bears had taken firm control at that time. That single day's action initiated the sharp downtrend that found its bottom on October 28th. The subsequent recovery in November has been strong, but it's now facing resistance from the levels it broke down from. We're currently in a pivotal area, consolidating after a significant pullback. Now, to understand the very latest price action, let's drill down to the 15-minute chart. This gives us a look at the price movements from the last few trading days, from November 12th through the 16th. On this time frame, we can see a short-term downtrend has been in play. The price peaked around $4,211 on November 12th before beginning a steady decline. A sharp drop occurred on November 13th, breaking below several support levels and confirming short-term bearish momentum. The selling pressure continued until the price found a temporary bottom around the $4,037 level on November 14th. Since that low, the price has been in a recovery or consolidation phase, managing to climb back towards the $4,100 area before settling around $4,096. This shows us that while the immediate downward pressure has eased, the bulls haven't fully regained control on the lower timeframes just yet. For day traders, the key short-term resistance to watch is that recent high around $4,211. A break above that would be a strong sign that the short-term downtrend is over. On the downside, the recent low of $4,037 serves as critical short-term support. If we lose that level, another leg down is very likely. Let's pull back to the daily chart one last time to put everything together and talk about what to look for next. So, to recap, the long-term trend is strongly bullish, backed by very powerful fundamental news regarding expected rate cuts. However, we are in a medium-term corrective phase after hitting a new all-time high, and the short-term trend has been bearish, but is now showing signs of stabilization. Let's outline the most important price levels to watch. The ultimate resistance remains the all-time high near $4,380. A more immediate and significant resistance zone lies between $4,200 and $4,250. Breaking this would signal a continuation of the larger uptrend. The current price area around $4,080 to $4,100 is a crucial pivot point. Holding above here is key for the bulls in the short term. On the downside, the first major support is the psychological $4,000 level. Below that, the most critical support zone is the recent low between $3,880 and $3,900. A break of this level would be a major victory for the bears and could trigger a much deeper correction. So, what are the likely scenarios? I believe the bullish scenario has a higher probability, around 65%, given the strong fundamental tailwinds. For this to play out, we need to see the price firmly break and hold above the $4,200 resistance. More dovish statements from Fed officials would reinforce this outlook, likely pushing the price to retest the all-time highs. A bearish scenario, which I'd place at around a 35% probability, would involve a failure to break that $4,200 resistance, followed by a break below the $4,000 support level. This would become much more likely if we get unexpectedly strong U.S. economic data, which would pour cold water on the immediate rate cut narrative. In this case, a retest of the $3,900 support area would be on the table. Keep a close eye on those key levels and any upcoming news related to the Federal Reserve and U.S. inflation data. That's all for today's analysis on XAUUSD here at Explain the Charts. Thank you for watching, and we'll see you in the next one. Please remember, this video is for informational purposes only and is not financial advice. Trading involves significant risk, and you should always conduct your own research and due diligence before making any investment decisions.